Capital One Semi-Truck Financing. The role of the customer or their trusted advisor is to understand the basic credit information requirements and how the overall risk to the customer and their industry will be perceived by the lender. The irony of a lot of business leasing is that the industry for the most part used historical analysis to project future ability to pay. That is a difficult concept for the customer to handle more often than not. As an example, the customer may have lost some money last year driving the negative cash flow figure. Prospects of improved new orders are coming in, and yet the business has a problem in getting new financing. If the customer is qualified to make such a submission, a solid package as per our list noted above should lend itself towards an approval at current market rates and structures. If the customer feels they are not properly qualified to make such a submission, they are strongly encouraged to use a qualified intermediary who knows the industry and, more importantly, knows the specific weighting given by a lender to the above noted submission requirements. The amount of information required around each component is more often than not determined by the size of the transaction or the lender's total exposure to that customer. In many cases, small-ticket transactions are adjudicated via a credit application and public reporting sources such as Equifax or Dun & Bradstreet. Typically 60–70% of all small-ticket transactions are approved. In summary, customers who want to get a prompt and of course positive lease approval should focus on providing a clean package of required information that will ensure a prompt approval based on specific industry requirements around the transaction size and asset type. Knowing that the lender will focus on future potential of the firm, the management experience, and the collateral asset are valuable data points for any business seeking a business equipment financing lease.